Chapter 5, Manufacturing Overhead. At the end of the lesson, students should be able to first know the definition of manufacturing overhead, second, know the concept of actual overhead costs, applied overhead costs, and budgeted overhead costs. Third, make comparison of actual costing, normal costing, and standard costing. Fourth, the advantages of using normal costing system versus actual costing system. Number 5, calculate predetermined overhead rate POR. Number 6, calculate the product cost per unit in normal costing. And number 7, clarify and calculate underapplied and overapplied overhead. Definition of manufacturing overhead. All manufacturing costs other than direct material and direct labor costs. Overhead costs are recognized as indirect manufacturing costs. Example of manufacturing overhead are indirect raw material, plant rent, indirect labor, plant utility, plant insurance. Concept of manufacturing overhead. It is actual overhead, budgeted overhead, and applied overhead. What is actual overhead? Refers to amount of indirect manufacturing costs actually occurred involved in certain period of time. Example are telephone, electricity, and water bills. The bill amount will only be known when we receive the bills. What is budgeted manufacturing overhead? Refers to planned or scheduled manufacturing overhead costs. Actual overhead cost is still unknown. Example, Syarikat Awas Berhad made estimation of overhead such as, example, supervisor salary 100,000, plant depreciation 7,500, machine repair 25,000. What is applied overhead? Calculated overhead estimation based on actual activity. The formula is applied overhead is equal predetermined overhead rate multiplied by basic activity. The difference between the actual overhead cost incurred and the amount of overhead applied, there will be over or under applied overhead. The comparison of actual costing system, normal costing, and standard costing. Actual costing, taking into account the actual cost of direct material, actual cost of direct labor, and actual overhead costs. Normal costing, taking into account the actual cost of direct material, actual cost of direct labor, and applied overhead costs. And meanwhile, standard costing, taking into account the standard cost of direct material, standard cost of direct labor, and standard overhead cost. Determination of product cost per unit using actual cost, actual direct material plus actual direct labor plus actual manufacturing overhead, you get product cost per unit. Determination of product cost per unit using normal costing are actual direct material plus actual direct labor plus applied manufacturing overhead, get product cost per unit. Determination of product cost per unit using standard cost. Standard direct material plus standard direct labor plus standard overhead. We get product cost per unit. Advantages of normal costing system compared to actual costing system. First, product pricing can be determined in advance. Second, the cost of the product will be remain at a certain time period for using the same overhead rate. Actual costing system is for reporting purposes. Determination of products cost per unit using normal cost system. Manufacturing overhead costs were absorbed or applied into product using predetermined overhead rate. What is a formula for POR? predetermined overhead rate equals to estimated total manufacturing overhead cost divided by estimated basis of yearly activity such as machine hour, direct labor hour, etc. Denominator activity. Basic calculation for POR, there's 5 basic activities. First, production unit. Second, direct labor hour. Third, machine hours. Fourth, direct material cost. Fifth, direct labor cost. What is underapplied and overapplied overhead? Difference between the overhead cost applied and the actual overhead cost is called either underapplied or overapplied overhead. Over-applied overhead means applied overhead more than actual overhead. Meanwhile, under-applied overhead, applied overhead less actual overhead. Adjustment of under or over-applied overhead need to be done at the end of accounting period using cost of goods sold account. Thank you. See you again.